Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. Hope you're having an amazing day. We're going to take a look here at Bitcoin, see what's going on, of course, help us understand best practice, big picture, the whole 9 yards to obviously try to survive this market. And simply put, it's on its way down. And we'll talk about that here in a moment. Not a financial advisor, of course, if you're new to the channel. If you're not, thank you again so much for all of your continued support. I deeply appreciate all of the awesome, amazing comments and feedback I've received over the months here, and essentially the last year, basically, since April of last year. So, just thank you again so much for all that support. If you are new to the channel, again, if you want to become a better trader, just so you know, I have a trading academy, trading community, and signal group. Send out signals for every trade that I take. We've been shorting like crazy and hitting some pretty decent profit targets. But more importantly, I have a trading academy so you can learn how to grow as a trader. So check that out in your own time. CryptoCache.tech is a site. Link in the description below. I do offer discounts for military and low-income housing as well. All right, so take a look here at Bitcoin. Big picture, pretty simple, straightforward on a downtrend. How much lower is it going to go? Well, we've got some key level supports we need to acknowledge. And once again, I drew this out yesterday. If you didn't catch that video, it's fine. Here's an update. This green area here was essentially our primary support level. That's the most recent lows that we've experienced this year. All right. The red area is basically 2021's lows, at least the range of the lows. In other words, the one-day candlestick closes, basically lowest and highest points there. That being said, we tested and basically bounced so far off of 30,000. We're approaching 31,500, this next kind of key level resistance. So there's a chance we might see some channel trading or some range trading between 30 and 31.5. But the key here, we need to understand this, is a close below 30,000 would be adverse. It would not be good at all. So to see a nice green candle here today, even though it's got a large candle wick, is a good sign. It's showing there's a lot of buying pressure and a tremendous amount of volume being brought into the market. So again, I don't think a lot of folks expected it to sell off so strong yesterday, but since the market had opened and kind of gapped down in the traditional US stock market, that essentially did not help at all. Right? It was like a 2 or 3% red day for the traditional markets, and that's quite a lot. That'll translate into a very significant difference here. And what we saw yesterday was a 13% correction in one day. That's quite a lot. We're not used to seeing that kind of movement. So that being said, well, actually, no, we are used to it, but it shouldn't have came so strong is all. Regardless, that's kind of what that looks like, and that's where we're at now. And now that we're here, we need to acknowledge the fact that a close above 31,500 would be very important to help us understand we might be back on track to continue back upwards. If we close below 31.5, we may be range bound for some time to either retest 30,000 or to possibly continue to progress upwards and to continue to make higher highs. All right, so again, that's kind of where we're at there for that in that sense. I won't bother to look at the weekly or the monthly for the moment because I went into detail on that yesterday. I'll cover that at least every other day. But the general sense of that is that we're underneath the 20-day simple moving average on the monthly, and anytime we've done that previously, we've stayed below for at least 6 months at a time. So again, if history repeats itself, we have 6 more months of sideways action before we can break back above that. All right. So that does put us sometime later this year to have a potential bull run and a strong recovery. Okay. And once again, this red that we're seeing right now is very synonymous with that type of behavior, and that is something to acknowledge. We're also under 30 on the RSI, or tentatively under 30 on the RSI. That really just tells us that we got overextended, because anytime you've seen the RSI come below 30, we do end up having some type of a rally and a recovery afterwards. Okay, so it's less common for the price to come down that low, but in general, there's an inevitability where the price will eventually come back up again. Okay, so just keep that in mind. There's no guarantees, of course, because this one took about 2 months to recover. So I don't think we're going to see a bounce back as if it didn't happen. We're probably going to spend some time between 30 and 40,000. That's a strong speculation. We lose 30,000, we might spend more time in the 20s. Obviously, we'll bridge that gap when we get there, but 27,000 is essentially the next key level support minus, right around 22. So between 22 and 27,000 is the next area that we could experience some travel. Again, we'll bridge that gap when we get there. A close above 30,000, though, I think at this point is extremely important. And, continuing sideways at the very least is what we want to do. Okay, so again, that's kind of where we're at there. Just kind of summarize with the moving averages, we're below all three. very standard, the 20, the 50, and the 200. They're just kind of hanging out above. And until we can get back above any one of those, we're going to probably continue to see some downside. And as you can see, the 20s working synonymous here in a lot of ways with this downward trend. Okay, albeit a little sharper now that we have this strong selling pressure. So we could see the 50-day SMA, sorry, the 20-day SMA tested here in the relative near future, which would be nice. If we can break above that, that would be a good starting point to essentially help us understand that we've broken that downward trend. Okay. Until we get there, though, we still have to assume that the price will continue to go lower. That's kind of just the general sense. But once again, relief recoveries and things of that nature, they do happen. That's kind of what we're seeing here so far. A little bit of a relief rally. We can see last night we tested about 32,500, 32,600, and we're kind of correcting ourselves kind of to average out about 31.5. Once again, that's basically what we're looking at here for the moment, and that's neither good nor bad. It just is what it is. I would not, again, expect this to continue much longer, but if it were to, it would be important to continue to make higher highs and higher lows. But until we break above this trend line, we should expect the price to continue to progress sideways or down. Okay. Once again, you're going to see it might establish a range. It might continue to come up all the way upwards of about 35,000, kind of be range bound here between 30 and 35. If so, that'd be great. I certainly love trading those type of ranges, but on the same accord, when it sells off, how much harder is it going to sell off? When is it going to sell off? And it's too early to kind of establish those ranges because we're literally only about 12 to 24 hours into this little trend. Okay, so a little premature to kind of say that is the case, but that is a possibility because what you want is range bound activity before you see the next breakout. And what I mean by that is if we look back here last year, you can see that the price was range bound right between 30,000 and 40,000. It pretty much stayed in this channel the entire time and then inevitably continued higher. Okay, so generally speaking, what I'm getting at is that to be range bound, that is essentially a good thing. That's a sign of a transition because there's always a declining market, there's a range bound market, and there's an inclining market. You preferably want to trade the inclining, but the range bound is also very important because that's the transitionary period where we could see the price action level out, not go any lower than 30,000 and then come up again. All right. Just don't expect it to come up again strong or fast in the relative near future. I think it's unlikely we'll see something like this, but I'd love to see that, of course. It's just that, with this strong of a decrease, it's going to take a little while to recover. All right. You can't expect us to get right back into the race. All right, anyways, back to the 4 hour, just kind of quickly summarize, still testing 30 on the RSI. In fact, that looks like it to be a 10 of resistance for the moment. So, again, a close above 31.5 is extremely important. That appears to be a resistance level for the moment, and that was a previous resistance level last year too. Okay, so we just got to recognize that. There's a potential MACD convergence here, but it's not looking super strong. We don't need to rely on that at all. Look at the 1 hour, we're going to be well below the cloud, but it does tell us that if you have a short position, you may want to consider closing it or taking your profits and essentially waiting for the price to establish a direction, okay? Because again, even though we're underneath the cloud, that's no guarantee, but that does help us understand that we're on the wrong side of the tracks for a long position and essentially shorts are still viable. It's just that that window is closing, so to speak, because these two are intersecting soon as well. So again, generally speaking, the cloud is basically telling us that we're under a key level resistance, as we can obviously see, but we need at least another 12 to 24 hours of sideways action before we can be naturally above the cloud. And then, of course, a lagging span would be somewhere up here in this range. All right. So generally speaking, not terrible on the 1 hour, but you can tell we're having trouble establishing higher lows because we're creating essentially a lower low right now. Again, a lot of contrary information, and I would say it's just too early to get in. So be careful and cautious. I'm waiting to send out signals for the moment until we get some kind of confirmation that we're on the right side of the tracks here. And I think we should probably wait at least 24 hours before we do that. If you do, just make sure you're careful and cautious with the trades that you take and just know that it could change on a moment's notice. Again, the likelihood of it continuing lower right now, at least dramatically lower, is fairly low considering the fact that we see a lot of buying pressure at this price point. And the simple fact of the matter is it shouldn't have came this low this fast, and that will essentially allow for us to hold the price action in place. So I do kind of like where we're at here. I feel as if we have more potential for upside than downside at this immediate time frame. There's a good chance we'll probably see 35,000 tested in the relative near future, but between now and then, we don't have confirmation it's going to do that. So why risk that, and why gamble? Okay, again, depends on your overall risk tolerance and a whole lot of things. But for me, for right now, I think it's a little too risky to jump into a long position, even though it's very tempting. What I did do, of course, instead is got a nice fill at 30,000 for my dollar cost average. I've been consistently adding to my position as the price comes lower, so I'm perfectly fine with the way that the market is trending. And if you look at the overall sense of things, it's a flash sale. Things are more affordable, and unfortunately, a lot of alts got wrecked, but most of them are back on track here today too, within reason. So, generally speaking, careful traveling or trading with really tight stop losses. You may want to have none at all and use very small position sizing. That's essentially what we're doing, and it makes the most sense considering the market. And then obviously, if you have a realistic short position, you might want to add perhaps a little bit more, because Bitcoin may not be done yet. We need to recognize that we're right on the edge of a key level support. As soon as we lose 30,000, we start getting some one-day candlestick closes below 30. That's going to be a pretty strong warning sign that we're probably going to be trending lower to 27, 24, 22. Okay, and those are some good dollar cost average targets. I have basically 27,000 as my next target that I'm shooting for with Bitcoin. Now, is that going to happen? There's no guarantees. We may get a candle wick down there, but it might even continue past lower than that. We don't truly know just yet. Everything's pointing down for the moment, and we need to acknowledge that and just be careful and cautious. So I hope that makes sense to you and how I'm explaining things. And if you do make sense of what I said here and you want to make sense of it more, feel free to become a community member. CryptoCache.tech is a site. Link in the description below. I do look forward to working with you, and I hope you have a great rest of your day. Thanks so much. We'll see you.